Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Now, welcome to the COB. I'm Sue Lannon. Let's have a quick check now on what happened on the market. So we have seen the ASX 200 inch higher. Firstly, we'll start with the SIBO 200. It is higher at the moment. ASX 200 also up about 0.2%. That's after 2 days of losses. We saw around 7 of 11 sectors rise, led by miners and energy stocks. Zip got sold off on uncertainty surrounding the US inquiry into the buy now, pay later market. We saw tech stocks weigh on the market. As I mentioned, mining and energy stocks held up thanks to higher commodity prices, and investors are waiting the latest GDP figures for the September quarter. They'll be out tomorrow. So let's have a look at the themes. We did have tech issues, tech stocks in the red as they tracked losses on Wall Street. Drone Shield down. It was another down day for the defence firm. It's lost more than half its value. That's after its boss sold $50 million worth of shares. And Bitcoin bust. The cryptocurrency sees another sell-off. It's fallen below $85 US. Now let's have a look at the sectors of the day. As I mentioned, tech stocks fell. We saw WiseTech Global down more than 2%, Xero also lower. So was Next DC and Technology One, and as you can see there, Zip fell more than 11%. Turning to energy stocks now, oil prices rose on geopolitical risks after Ukrainian drone strikes on Russia and also the US-Venezuela tensions. Santos was higher, Karoon Energy up nearly 2%, Ampol also gained. Now let's have a look at the miners. They were also higher. That's on a rise in commodity prices. BHP rose nearly 1%. Rio Tinto up 1.5%. Fortescue also gained 1.5%. Let's have a look at the top corporate stories now. Collins Food fell despite an upgraded outlook. That's after half-year profit rose nearly 13%. Woolworths saw it said that a shareholder class action proceedings launched last week are market sensitive. And EVT has completed its acquisition of ProInvest, Hotel's third-party management business. Also, Air New Zealand says group capacity increased 4.4% in October, and Deep Yellow appointed Greg Field as the new MD and CEO. Now, let's have a look. We're talking now to the COB. Welcome to the COB, Martin Crabb from Shaw and Partners. Now, the Zip plunge today. So what's the reason behind that?
Yeah, a lot of uncertainty there, Sue. As you mentioned, there's 7 attorneys general in the United States have, I suppose, launched a regulatory request to look at the, the customer service or the consumer protection laws that are applicable to Zip. If you throw your mind back to, I suppose, Afterpay in Australia and even Zip in Australia, a few years ago, a lot of the analysts were saying, look, this is a credit provider. It should really be regulated like a credit provider. They should have a better sense of the ability of their customers to borrow from them. So they've got to do more credit checks, just like a bank has to do, right? So you can't just walk in off the street and get a loan from a bank. You've got to go through a few steps. Whereas buy now, pay later, any Tom, Dick and Harry can get access to that. So it seems that pendulum is swinging also in the US. This is not a new phenomenon. We have seen it before, but it spooks the market because, the attorneys general have come out with this thing overnight. Obviously, the company hasn't had time to respond to it. The market's in a shoot first, ask questions later sort of mind frame at the moment. We've seen that from some of the results recently. So I wouldn't be surprised if this blows over, but it is a very well-owned and well-loved stock amongst the small cap managers. So I'd say it's a little bit of a crowded trade in some respects. It's been a one-way street for a while. And so this could bounce around a bit. I think over time, the market will realise that buy now, pay later is not credit provision as they did in Australia, but it might take us a while to get there.
Right, so do you think that this will blow over?
I think it will. The question is how much water will go under the bridge first, because as I said, it's a pretty crowded trade and you might get some nervous fund managers. Some of whom have been caught up in the corporate travel debacle going, we don't need 2 of these. let's just trim the position. And maybe in hindsight that's not the right thing to do, but at the time it's like, it's a little bit painful. Why don't we let some of these go? So it may stay under pressure. I think in the fullness of time, the industry will be fine as it's operating in a lot of different countries without too much problem. I think the US has just got to go through that process. So I think it'll be okay.
Now, you're also watching Bougainville Copper, speculation that the Panguna mine could reopen, but we've been seeing this for a long time.
Yeah, so the Panguna mine, which is owned by Bougainville Copper, which in turn is majority owned by Rio Tinto, it shuttered in 1989 when, I remember being on the dealing desk when this all happened, and it's one of the largest copper mines in the world. There's something like 5 million tonnes of unmined copper sitting in the ground up there in Bougainville. But due to political reasons and traditional owner reasons, they shuttered the mine. And you can see in time, someone will have a crack at reopening it. I remember Bob Hawke went up there in the 90s, or maybe in the early noughties. He went up there to try and talk them into reopening it. And you can see there's spikes. So there was a rumour a couple of weeks ago that the Bougainville landowners were talking to a company to maybe reopen it. Stock shot up to, I think it got to $2.50 intraday, sunk back down to sort of 50 or 60 cents, but it shot up again today. It's up another 30% today. So this is a real punter's stock. I just think it's interesting in a market where everyone's trying to buy copper. We just saw BHP have another crack at Anglo and didn't get it. And here you've got one of the largest deposits of copper in the world. So it's not surprising to me that there's some people sniffing around saying, you know how you closed this mine all those years ago, maybe you should reopen it because you could make a lot of money. There's the environmental side is one thing, but I think, that would make the people of Bougainville very wealthy, and then they can do other things with the money. So it doesn't surprise me that this story comes back to market occasionally. It seems like someone's giving a bit of a shove today. So 30% up in a pretty soft market. It's kind of stood out to me, I think.
All right, well, let's turn overseas. There's concern about Oracle's credit default swaps.
Yeah, look, I think one of the questions we get asked by clients a lot at Shaw and Partners is, are we in an AI bubble? And the reality is nobody knows. We don't think we are. When the analysis we do suggests that AI CapEx is here to stay. But if you think it's in a bubble, how do you hedge your portfolio? So I was speaking to a credit manager the other day, and it seems that a lot of hedge funds are saying, look, if this thing's going to go pear-shaped, then you want to buy protection against a company that's got a lot of debt. So Oracle's one of the largest players in the AI space. They've done significant deals with OpenAI, with NVIDIA. They do provide a lot of the infrastructure that goes into the whole data center and AI narrative. But they've got $90 billion of debt. So they've taken on a lot of debt to try and do their build out, whereas most of the Mag 7 have got free cash flow, so they're not a credit risk. But the market's definitely betting that, if there's one canary in the coal mine, it's Oracle. So if you're a believer that the AI bubble is about to burst, apart from short selling, which is very difficult for us mum and dad investors to do, there is an instrument you can buy called a credit default swap, which will protect you if something like Oracle goes broke or looks like going broke. And this is what happened during the GFC. Obviously, a lot of housing stocks and banks were subject to default. So that's just one that we're watching. The credit default swaps have gone from 40 basis points to 120 basis points in the last few months. That's people betting against the AI bubble. So just one to watch.
And where do you see the ASX going?
Yeah, not very far. I mean, our sense of fair value is probably 5 to 6% above where it's trading at the moment. And that's premised on some earnings growth in the next 12 months. And you're going to pick up a nice dividend yield. So if you're in our income portfolio, you're picking up like a 6% grossed up yield, 6.5% grossed up yield, but the market's more like 3 or 4. So you'll pick up 3 and 4 from dividends, probably 5 or 6 from capital growth or target price appreciation. So that's a 10% return for us, which is kind of normal. If you own shares for a long period of time, that's the sort of number you get. So we think the market looks okay, not outstandingly cheap, but fair value around here.
Okay, Martin Crabb from Shaw and Partners, thanks so much for joining us.
Thanks, Sue.
Now let's turn to the stock of the day. That was Collins Food. Now listen now to our experts, Sean Hickman from Market Matters and Rudy Filipek from FN Arena.
You can probably assume that this share price is in for a higher level at some stage, because higher profits, the analysts will come out and they will all revise their forecasts. The one thing I maybe put here as an important input is then if you look at the past 10 years, the past 5 years or so, this stock has its cycles. Yeah? So you have to be careful to maybe date it, but don't get married to it. Because you may have to wait another 5 years before you get to the same price level again.
I agree very much with Rudy. It's very cyclical. It hasn't moved in the last 4 or 5 years, and it is vulnerable to downturn in the economic cycle. If people are feeling a bit poorer, they spend less money on things like this. And we're not going to get rate cuts next year. We might get rate rises. Personally, I think we'll get no change to interest rates next year. They'll go out on a limb and say we won't get changed until 2027. And so I think this cycle, this recovery, is probably in the mature phase, and I'm going to go slightly different to Rudy. I'd call it a hold. And by that, I couldn't see no reason I'd be buying it here, so I'll call it a hold.
And let's have a look at today's market leaders. Yancoal was higher, it rose 3.5%. Homeco Daily Needs REIT also rose. AUB put on nearly 3%. Judo Bank gained, as did Dexus. And turning to the laggards now. We talked about Zip, that lost 11%. Catapult fell 10%. Drone Shield also down. Telex Pharmaceuticals lost ground, and Guzman y Gomez also lower. Let's have a look now at some of the small caps. African Gold jumped up more than 62%. We just heard about Bougainville Copper, that rose nearly 40%. Coronado Global Resources put on 10%, and OneView Healthcare rose 10%. And looking at the laggards now, SEA Forest lost nearly 18%, Resolution Minerals lost 13%, and Paragon Care fell 10%. So let's have a look at what's happening overnight. We've got the EU CPI estimates and the EU unemployment rate. No change is expected. It's around 6.3%. And let's have a look at what's coming up tomorrow. We've got the GDP figures for the September quarter. 0.7% growth is expected over the quarter, and the Reserve Bank Governor Michelle Bullock will speak in front of the Senate Economics Legislation Committee, and we have an investor briefing from WiseTech. Let's have a quick check of the markets. The CBO 200 rose 0.2%. The ASX 200 also rose 0.2% after a bit of a choppy day. That's all from me. Goodbye.